Okay, so let's be real. We all know we're supposed to be investing. But the big question is always, where on earth do you even start? In this explainer, we're going to break down the absolute basics and give you a simple, clear roadmap to start building wealth, even if you're starting from zero. And yeah, I mean that literally. Owning something like a Lamborghini might feel like a total pipe dream, right? But what if I told you the math to make it happen is surprisingly simple? Believe it or not, it all starts with this. Just $10 a day. If you can invest that consistently, you unleash the power of compounding, which is just a fancy way of saying your money starts making its own money. If you can get a historical average return of about 7%, you could be looking at $500,000 in about 35 years. See? The secret isn't some huge chunk of cash up front. It's just being consistent over a long time. Now, hold on. Before we get too excited, let's get real for a second. This is not a get-rich-quick thing. Not at all. The market is a roller coaster. You're going to have amazing years, and you're going to have some really bad years. The key to actually winning this game is just having the willpower to stick with it, even when it feels like everything is going wrong. So where should you put that first $10? For most people starting out, the simplest, most effective way to begin is with something called an index fund. Think of it as the ultimate set it and forget it approach to investing. The whole idea behind an index fund is actually pretty brilliant. Instead of trying to be a genius and pick the one company that's going to blow up, you just buy a tiny little piece of a whole bunch of companies all at once. Like an S&P 500 index fund lets you own a slice of the 500 biggest companies in the US. It's diversification on autopilot. So what kind of results can you expect from that? Well, historically, the S&P 500 has returned about 7.5% a year, and that's after you account for inflation and reinvest all the dividends. Now, of course, past performance is no guarantee of future results, but that's a seriously powerful track record for an investment that requires almost zero effort. And hey, you don't have to take my word for it. The legend himself, Warren Buffett, recommends this exact strategy for pretty much everyone. His logic is simple. Over the long haul, this approach will likely beat most other investments, and it costs you almost nothing to do it. So, let's sum it up. Index funds? Super easy to get started, very little work, and historically, they beat most people who try to pick their own stocks. The downside? Well, your returns are just going to match whatever the market does, and it's a long-term game. But for a simple, hands-off approach, they are really, really hard to beat. Now, maybe that passive set-it-and-forget-it style just isn't for you. If you want more control and the potential for even higher returns, let's talk about real estate. But I gotta warn you, this is the complete opposite of passive. This is very hands-on. This might look a little complicated, but it's really a repeatable formula. You're not just buying a house and hoping for the best. You're following a strategy. Find a deal in an up-and-coming area. Use the bank's money to your advantage. Fix it up to make it worth more, and get a tenant in there to start paying it all off for you. Then you do it again. And here's why real estate is so powerful. You're not just making money one way. You get paid when you buy a good deal. You get paid when you fix it up. You get paid every month from rent. You even get paid as your tenants slowly buy the property for you by paying down the mortgage. It's a machine with multiple streams of income. So yeah, the potential returns and control you get with real estate are incredible. But, and this is a big but, it's basically a part-time job. You need a lot of money to get started, your cash is tied up, and let's just say dealing with tenants isn't always a walk in the park. This is definitely for the hands-on investor. All right, time for what you might call expert mode, picking individual stocks. This is where you find the highest potential rewards, but you guessed it, also the highest potential for getting wiped out. I mean, just look at these numbers. If you happen to pick the right stock, you could have made out like a bandit. An 88% return on Apple, 140% on Tesla, in a single year? The upside is absolutely massive, but there is a huge, huge catch. And here it is. The cold, hard truth is that most people, and I mean the vast majority of people who try to pick stocks, fail to beat the overall market in the long run. It's really hard. You're basically betting on just a few companies, and that's way, way riskier than owning a piece of the whole market. So the main takeaway here is super simple. If you want to try picking individual stocks, you have to treat it like a trip to Vegas. Only, and I mean only, invest money you are fully prepared to lose. This is not your retirement plan.
Okay, so we've covered the big ones, but before you put a single dollar into any of them, there are actually two foundational investments you have to make first. Seriously.
This one is completely non-negotiable. You have to have a financial safety net. A stash of cash for emergencies, for unexpected bills, or even to jump on a great investment opportunity when it pops up. A good rule of thumb is to save up about 3 to 6 months of your living expenses.
And please, don't just let that money rot in a checking account earning zero interest. Put it in a high-yield savings account where it can at least try to work for you. You want to look for a rate that can help your money keep up with inflation so it doesn't lose its value over time.
And finally, we've arrived at the most important, highest return investment you will ever make in your entire life. It's not a stock, it's not a house, it's you. No question about it. And this isn't just about financial return, you know? Learn a new skill that could get you a raise. Network with people who can open up new doors for you. Heck, even pursue hobbies that just make you happy and recharge your batteries. Investing in yourself leads to better work, more opportunities, and honestly, a much more fulfilling life. So, after all that, the question is pretty simple, whether it's putting 10 bucks into an index fund, saving up for that first down payment, or maybe just buying a book to learn something new, what's your first step going to be? Because that journey from zero, it starts right now.